maybe we're looking at it all wrong. Maybe we're so blinded by big tech, we don't realize that what we're seeing right now is a reasonable pullback after a relentless rally in some highly visible $100 billion and more stocks, virtual purloined letters of equities. And that's how I look at today's action. Dow dipping 252 points, S&P declining 0.76%, and the Nasdaq losing 0.96%. What do I mean when I say we're blinded by tech? Look, most people who own stocks tend to own the same stocks. So in many cases, they don't understand how incredible the rally's been this winter. For example, people care more about every nook and cranny of Netflix, fortunately good signups tonight so the stock goes higher, than they do about stocks like Boeing or JP Morgan or a host of other blue chips. Yep, so many great companies are outright ignored here, in large part because the mega-cap tech names are much higher profile and have gigantic mind share with the American public. We see them as the protagonists of the stock market. And to be fair, for a decade, that's exactly what they were. But that hasn't been the case for over a year now. Unfortunately, most people haven't adjusted to the new reality, something we implored people to do at today's Investing Club meeting. You gotta go watch the tape. The real truth of this market is that hundreds of non-tech stocks bottomed in mid-October or before then. Since then, they've been on a gigantic tear, just a huge run. And this week, they've finally taken a little breather. What happened at the bottom? Well, in late September, the dollar was peaking. Then interest rates finished their relentless climb less than 4 weeks later. In retrospect, these are the two very obvious events, but hardly anyone wants to believe in the bottom because we're so focused on the sputtering mega caps, the flailing semiconductors, and worst of all, the pathetic enterprise software giants. We've been stuck in a purgatory of our own making. Consider it a tech Titanic. All right, tech train wreck. So on one track, we had a very traditional bull market based on the dollar and interest rates peaking, both of which tend to be terrific for stocks for a whole host of reasons. But on the other track, we had the relentless beatdown in the Teslas and Salesforces and Amazons. It's absolutely insane that the second track gets, I don't know, how about 114% of attention? When I talk about the bull market track, it's not like these are obscure companies, people!
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.